There is no doubt that the Toronto real estate market has cooled, but how should buyers act in today's market? And when should buyers act? That and much more in today's video. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty. As always, back with another video for you guys here today. You can find my contact information on the screen or in the description box with regards to where you can get in touch with me, office address and information, and my email. Feel free to get in touch with me with any questions you may have. And if you want to do a little bit of your own due diligence before you do get into touch with me, feel free to just simply enter my name into Google, go through my Google reviews so you have a better understanding of what type of feedback others have provided. Anyways, enough of all that. Let's get to the point of today's video. I don't think there's any doubt that the Toronto/GTA real estate market has substantially cooled since peak market conditions. For instance, the average sold price of a property across all areas in the GTA is down about 19% from peak prices in February, where that average was at 1.3. Now that average is at the $1,070,000s. That's a drop once again in average prices of $259,000. Sales are down, terminations are up, properties are staying on the market for a longer period of time, and a lot of other things we can go through to show that the Toronto/GTA real estate market has substantially cooled down without a shadow of a doubt. So the question for today's video is, how should buyers navigate this market? What is the approach buyers should take on this slower, cooler Toronto real estate market? And let's start with how much you need to earn on paper for you to be able to purchase a property, assuming the stress test. Let's see how much a typical buyer needs to earn in order to purchase a property in the city of Toronto. For instance, in March of 2022, when rates were around 3.14% and the stress test rate was at 5.25, the average prices we were looking at were roughly 1.3. As I said, around February, March is where the Toronto and the GTA real estate market peaked. More particularly, March for condos, for freeholds, February. So looking at the average price of $1,335,000 with the stress test rate of 5.25 and mortgage rate of 3.14, purely on a income basis, the income required would have been $210,000. So that is how much a person would have needed to earn to be able to qualify according to those given rates in the stress test at the current moment in time, assuming once again the average price of $1,335,000. Now let's contrast that with June of 2022. But of course, since then, we know the rates have gone up several times. The market has cooled, average prices are down. So we're dealing with different variables. And now accounting for different variables, how much does a home buyer have to earn in today's market as opposed to earlier in 2022 to be able to purchase a property? And assuming a rate of 5.21% for mortgage rates, and a stress test rate of 7.2%. Now a potential home buyer has to earn $226,000, even though we're going based upon a lower average price. Meaning essentially with these rate hikes and of course consequently the increase in the stress test, the additional income required for a home buyer is around $15,000 at obviously $226,000 annual income. So in a sense, we clearly see that as rates keep going up and prices keep going down, it's difficult for a lot of buyers to enter into the market if at the very same time they do not see an increase in their annual income. Now, this obviously does not account for all buyers involved in the market, only the buyers that would have to deal with the stress test. So it's not a perfect science and does not account for everyone. But the buyers who are actively involved in the market, should they look to act as prices continue to go down? And my thinking here is simple. In my professional opinion, it's always better to buy at lower prices with higher rates as opposed to higher prices and lower rates, because essentially the discounted price at which you'll be buying, those savings will last forever. And when I say forever, I mean whether you're holding on to your property for 3 years, 5 years, 10 years, you will have always had purchased your property at a far lower price compared to peak market conditions merely 3 to 4 months preceding the time of your purchase. Yet the rates that are high right now, whether you're on fixed or variable, obviously with variable much less so, but even with fixed, those rates will not last forever. Those rates will change. Those rates will eventually go down. Yes, in the short term, you will pay a higher monthly, but that is temporary. That is not forever. Which leads me to my next point. The people who are best situated in today's market to act and buy at lower prices are those who are buying with a hefty down payment, to the point where they're almost buying all cash. So pretty much cash buyers, because cash buyers are not susceptible to the same problems that every other buyer is dealing with in today's market. And that problem simply is the fact that as prices are going down, the market is becoming more buyer friendly in terms of how much leverage and how much advantage a buyer has in today's market. It's no longer a rampant bidding war market, but ironically, buyers, as a result of the increase in rates that is causing these buyer friendly conditions, cannot act as freely as well due to many factors that we have discussed. But cash buyers are not susceptible to this issue. Cash buyers are in a position to take advantage of a slower market that's caused by higher interest rates, yet at the same time not be victim to those higher interest rates. So in conclusion, I do believe, generally speaking, it's best for buyers who are able to purchase in today's market, who have not been eliminated in today's market, to take action and jump in this market to take advantage of some of the deals that are out there. The buyers who are best situated to do so are those who are buying with a hefty down payment or potentially all cash. Let me know if you have any further questions. As always, thank you very much for watching. This is Sam from SaberiSixRealEstate, Remax Realtron Realty Inc. Thank you, stay safe and stay tuned. Thank you.